Okay, we should be good to go, gents. Good evening. If anyone could give us signs of life in the chat, that'd be much appreciated. Audio, video, maybe our esteemed guests could also say hello, so your audio is fine.
Hello, everyone.
There we are. And the duck.
Hello.
Okay, fantastic. So you could just let us know whether our audio is okay. You can hear everyone. The ratios are acceptable. Once all of that is ticked, we'll be good to go.
Looks like it's good.
Looks like it's good.
Looks like it's good.
Loomdart is a fraud, being the first comment that I see in the chat. Anywho, I'm sure he'll have a chance to defend himself. But before we jump into that, as always, kind thank you to Bybit for sponsoring Technical Roundup. They give us money, so you don't have to. That's a pretty good deal, as far as I'm concerned. So thank you to them. Their links are in the description. Go check them out. Prove that at least 1% of our audience and engagement aren't Russian bots. That would already be a vast improvement on their current perception. Okay, with that out of the way, we're joined today by none other than Loom. Hi Loom, how are you doing?
I'm not doing too bad, Cred. You know, just living life. How are you?
Fantastic. Yeah, I'm very well. For those who aren't aware, so we're live at 9... Nope, that's not true. We are live at 7 UTC every Monday, Wednesday, Friday. You get me on Mondays. Once you survive that, your prize is Donald on Wednesdays. And then on Friday, at the moment, our format is what we call Casual Friday, which is this sort of thing. We gather round, we shoot the shit, for lack of a better term, and, you know, bring on guests, discuss things that are going on in the crypto space, take it a bit more light and casual to give it a bit of a weekend feel. So, as you can see, for this Friday, we have the distinct honor and privilege. We also broke the bank, of course, to bring on Loom. So, I mean, I'm sure everyone knows who you are, but do you feel it's too cringe to give a little self-intro, or how do you want to...
I can do a little self-intro.
Go on, then.
Hello, everyone. I am at Loomdart on Twitter, and I trade cryptocurrencies for a living, and I've been trading for a fair few years now, and Bitcoin is good, so... Hello.
Fantastic.
One of the OGs. Right?
Well, yeah, that's a great introduction, and then of course
I haven't actually heard the term OG in like months now.
I mean, it's only used to FUD people nowadays, right? Like if you joined in 2019 and you want to blame your malfortunes on somebody, you just use the term OG for this like secretive shadow QAnon cult who like counter trade you and ruin all your trades. But that's not to say that, I mean, the term itself is used to denote experience, which is what you are. And we're going to hope to pick your brain a little bit, see if we can perhaps figure out what on earth Loomlines are and why they work, aside from just a lot of capital being thrown at them. And of course, we'll be hearing a lot from the Duck. How are you doing, Duck?
Good.
Great. No, wow, that was very good of you. You know, really went with that one, Donald. Good job. Great social skills. 10 out of 10.
That's how I am, dude.
Fantastic. Right.
I
Well,
mean,
you know what?
It's German in me, right?
Well, yeah. Okay, fine. Yeah. Blame your country, as if Europe doesn't do that enough. So, Loom, the first thing I want to ask, actually, you know, again, for those listening, if you have questions, comments, topics you want to hear Loom talk about or us talk about collectively, just throw them in. It's supposed to be very engaging and interactive. But I want to talk about your S&P trade. Do you want to contextualize that a little bit for us and kind of give us a purview into your brain as to what's going on there, or what went on there? Because you closed it, I think, didn't you?
Yes, so I closed, so basically I shorted the SPX, I started entering at 3,200 and the average was like 3,210 near the end.
Should we screen share that?
Feel free to screen share. I think you can do it without my permission even.
Yeah, let me pop that up. Where's the... There we go. Present now. A window. Get the right window. Ooh.
Okay, I can see that.
Go. Yep.
Okay, so basically, you see this red line on the top, the diagonal one.
Chat, is that reasonably clear to you? The what Loom is presenting? Can you see it?
Let me get rid of the watch list.
Okay, yes, it is. Continue, my friend.
So basically, I freaking love this line because if you go on the monthly here, it's basically kind of the way I treat trend lines is kind of like just a basic moving average.
Mm-hmm.
Since effectively, like, if a market's trending, horizontals kind of like horizontals are useful, but since the market's trending, it's going up, and horizontals can't really follow that price action, especially for a market that's just consistently breaking all-time highs like the SPX. So I think people tend to go more towards like trend lines.
And why did you choose this one?
I'm glad you asked. Well, this line's a beauty. So there's mainly three big points of interest. The first one is, actually, I guess it's half the freaking chart, but this. So that blue circle, we consistently kind of use that trend line as basically support for the trend.
Mm-hmm.
And then we finally kind of blew up off of it into the 28s and then wicked around it a bit. And we did the exact same thing afterwards. But if you look here, oops, I do that every time. It breaks through the trend line and it retests it. And then it nukes. And so I think from that point onwards, like, that trend line becomes quite an integral part of the chart.
Because you have so many interactions with it, or
yeah, because it's basically, like you said, there's many interactions, so it's something people probably have on their chart.
It's like a Donald tweet.
But it's just like, since there are so many ways to interact with a chart, like there's countless indicators, just fucking billions of MAs. And so I think the most basic ones are usually the ones where it's more likely to work because there's more eyes just looking on it.
So does that introduce a kind of time frame bias for the way you know Loomlines, for lack of a better term? So you'll ascribe more significance or even more risk to those that are derived from really high time frames versus your kind of intraday stuff?
100%. So where's that Bitcoin line? Wait, let me use a nicer, cleaner chart.
I'm always in awe when I see
it. It's a bit messy, but say this yellow line.
Mm-hmm.
That line has more power than power. Like, it's probably the most important line on this chart, just because of how many times like the market's interacted with it. So it's usually like, the further back a trend line is, the more, I guess it's kind of self-fulfilling. It just becomes like a veteran. Like, you can always trust it.
No, I mean, that's not too different from how a lot of people look at technical levels as well. But I suppose another question, perhaps more beginner-oriented, is technical analysis. I mean, even basic stuff. It'll teach people how to draw trend lines in one way or another, right? Where you'll have like wicks, as it's commonly taught, and then a number of touches make a trend line valid, and then from then on it's kind of support resistance, right? The sort of canonical teaching of trend lines. Now, in your view, what are the distinguishing factors between a trend line and then perhaps how you draw the more loom line, right? For someone who sees this as recognizable, but wants to know to some extent, as far as you're willing to reveal at least, the nuances, the differences, or what made you perhaps move away from trend lines and use this instead? What are some of those distinguishing features?
I mean, like, the whole Loomlines thing was kind of a meme. Like, sure. I used to get roasted really bad on Twitter for like the colourful charts.
Mm-hmm.
I mean, it's when you've got so many lines, it becomes really hard just to distinguish them from like if they were all the same colour. So I just started painting them, and so I just kind of started going with the meme. And then I think there was a bit of ego involved with it as well. After a point, I was like, oh, fuck yeah, Loomlines, that's mine. But I mean, The question about like drawing them and any differences is nice, because the thing is you can't expect everyone to draw the same trend line the same way. So like there's always got to be kind of a little barrier in between, since you get the whole debate about like, do you draw from wick to close, or from wick to wick, or close to close. So I think you've got to kind of give it a bit of leeway, which is, since you see here, like it's respected, but there's wicks going throughout, and there's some closes below, some closes above. So it's more like a price area than something you can immediately work off of. So like,
is it just like you saying, okay, if it just disrespects the line like once or twice, so if it does something that it shouldn't do for like a brief period of time, that's fine. But if it does it for longer, that wouldn't be fine? Or how does it work?
So let's say here. So the way we do you remember the dump from 10 to like 9.5 back in late August 19?
Yeah.
Got
So the way
liquidated for all my Bitcoin. Haven't taken a trade since. So.
Yeah. Bye guys. That was all. So the way we broke through it, and then we broke back above it.
Mm-hmm.
So that should have been the hunt for liquidity, since we had a few closes below and then we broke above. So the fact that we broke through it again is kind of like the indicator. That would be the signal that like, oh geez, this thing isn't going to hold twice. We've already faked out of it once. And so that would be the signal that like that line is no longer valid for that certain support.
Would you just buy it, and then once it closes below, you're like, okay, this is roasted, I flipped my position? Or how do you trade those?
This is the issue. I don't kind of like, it's rather hard because it's very dynamic.
Mm-hmm.
So usually the moves off of these lines are rather violent. So it kind of gives you a bit of leeway to front run it, perhaps, where say the price is just below the line, and it'd be like, well, if we break this key level, the price is probably going to nuke really hard.
Mm.
So off of that, you can kind of, because you can kind of like, how would I say this? You can prepare for the worst. But since like,
no, I think I know what you mean. It's like, okay, this shouldn't have happened, so we might be in for trouble. Or the same thing, like if it doesn't act as resistance, it might just go much harder than you think, right?
Yeah, that sums up.
Frustrated intellectual trying to convey the nuances of his system. You know, I totally understand your groan, Loom. You know, that was kind of my question to some extent as well. Because I know some of your lines go way, way back, right? So if someone were to end up, and I think there are a couple questions in the chat to this effect as well, right? That if you were to end up in some miracle situation where your trader, whatever, ABC, Sniper 69, right? And one day you open TradingView and you've got all of Loom's Loomlines on your chart, right? And prices, let's say, approaching one of them. If you had to do like a 101, for example, so someone who has no idea how to actually trade these things, are there like one or two or some core principles, aside from not just necessarily getting a directional bias from the lines, but just actually taking trades? Because a lot of your tweets, you know, you tell yourself don't frontline Loom lines or don't fade Loom lines, or you'll circle kind of a confluence and price will bounce in that area. Could you give some insight into the actual execution side of things when it comes to these structures?
Ooh. Well, I can talk about the SPX one, which I think is like a bit of a simpler one.
Sure.
Where, since I guess when you get like, I mean, the whole move to the mid 32s was kind of like a euphoria move. So you get a kind of like a front running effect where if the line is meant to work, the close vicinity, like a close vicinity of this line should be respected. So like it shouldn't go too far above. And if it does, what you want to do is like short the retest of the line.
So if you would have gotten stopped out, you would have re-entered when it retests. I
Yeah.
would have been fine with that. That makes sense. Yeah, I like to do that too. So very similar. I think in general, like your strategy is very similar, just diagonally, which makes it a little bit more complicated. Because
I could
I
agree
mean,
with that. Yeah.
prices changes, right? Like for me, like I have a price line, and that line is always the same, and you have to adapt to like
Yeah, I have to
the time
update alerts.
distance. Yeah. But what made you like draw this exact line? Like, do you think anyone could copy like what you do, or do you think
I mean,
it's
like if you look at the weekly,
like where do you anchor it, and why is it anchored that way?
oh, so I anchored it here. Let me square this area first. So you see how we kind of break up off of it and then break down. Then we do
Yeah.
the same thing,
Mm-hmm.
and then we retest it here, and then
Yes.
fall again. We break through, and then here we retest it again.
Yeah.
Actually, looks like Bitcoin in late 2017.
It's true.
Kind
Yeah.
of, yeah. But so I'd anchor it from here, extended. So basically, like there-ish.
Oh, okay. So it's not like you zoomed out really far, looked at past price action, and then kind of made it from there. But it's relatively. I mean, it's a weekly chart, right? I mean, 2019 is a while ago, but it's relative recent. That one.
Yeah, I think it should be like, because it's all nice and well if your level was like used a lot in 2015, 2016, but like if it's not relevant to PA now, there's not really much point in having it. And like if you can draw it, like if I drew that just looking at 2019, I zoomed out and saw it had prior usage in 2017, say, then I'd know that like it's a good line to have on the chart.
Yeah, I like that.
And the logical question that comes from that, I think, because this is something we have to deal with, or at least I have to deal with from trading levels. What does it take, or what kind of price action needs to form for you to delete a Loom line, for example, right? Or to say it's no longer valid, or has lost its significance in some way. Do you have any special criteria for kind of reassessing their validity, or is it a pretty fixed process?
No, actually, have I ever deleted any trend lines?
That's why
No,
your
I
chart
think-
looks like it does.
I think just like usually sometimes it gets to a point where I've drawn too many lines and I'll kind of try and tone it back, since I feel like there's always gonna be some form of trend line in every general price range. But I guess just like if the price keeps wicking through a line or like just chopping alongst it and then it just completely disregards it the next like time it's approaching the line, I think I'd probably disregard it.
Yeah, so you disregard it and then wait for some time, and then you would use it again, right?
Yeah, but the most important thing is just like, I know I get mocked for having too many lines, but like if there are multiple lines at a price level that look vaguely similar to each other.
I can just imagine a scenario where Loom just gets completely wasted, has like 8 kebabs and stumbles home, opens up TradingView, adds like 20 lines and then blacks out, wakes up the next morning being like, oh my god, which ones are significant? I adjust it. And you know, he can never basically trade again because the lines are not deletable, and you know, that would be quite unfortunate. But I think
That's why I
go on.
That's why I keep the Finex chart like basically just pure. Get to the daily. Like these seem like pretty key lines that I shouldn't have to add anything or take anything away for like a decent while.
Yeah. What would you make if, like, let's say we break below 5K in this case, because you don't have any trend lines, obviously, because the trend's been up, right? Below 5K. Would you just kind of start with more recent ones and just draw them down, or do you think Bitcoin's always gonna go up and never gonna go below 5K?
If we broke 5K, I'd be very, very worried, I feel like. But trading wise, I'd probably, geez,
Turkish national anthem playing. You hear that, Donald?
I mean, you can speak it too, right? You can understand
Sorry,
it.
phone call. But I guess I just
Is that the trading
don't
desk
really know
calling saying
what
you've
I
said
do.
too much? Are they going to censor you now? You have to pack it up.
Nah, they're all just like, Loom, calm down. It's not gonna go below 5k. You can breathe. I guess I don't really know what I'd do. I'd have to find some new trend lines.
There was a question
Jeez.
earlier that I quite like, which is why are they all why are all the loom lines facing up, right? Or like upwards trending, for lack of a better term. Is that instrument specific or is it loom line
Yeah,
specific?
I guess it's just like if you look at the Bitcoin chart on a daily basis, it is going up, and upwards moving lines usually don't expire.
Oh, interesting. Okay.
Yeah, I mean, you can't go below 0, right? But you can go above. Like, you can make new highs all the time if you want to, or like if the market gives it
I
to you.
guess there was I think I did actually have a few, but they became invalid. Since if you can't really draw anything that's maybe something like this.
Oh my god, a live loom line. Leave a like on the video for this sacred ritual that we're witnessing here, never before seen. A loom line coming into existence in a live setting. Really, really special moment here.
Yeah, got a kind of like a line here.
So are we at resistance? This is kind of the next thing I wanted to ask, right? And as always, if there are any questions in the chat that you want us to answer or ask Loom, just ping them. But I just wanted to ask, so now that we've got like at least a baseline grasp of this kind of methodology, for lack of a better term, or trade identification method, whatever you want to call it. So where are we now for you, right? Like some present TA, if you will.
Oh, that looks damning.
So here we usually, like, regardless of the trend itself. So even if like I traded not delta neutral, but like completely trend neutral, just loom line to Jesus Christ, trend line to trend line, you can usually get away with, say we break through a level here, just shorten the retest of the nearest, I guess, but like the nearest kind of important trend line, which was the one at 90, the low 95s. And then it will usually kind of give you a retrace into an area where the price, like you could have shorted there and then closed at 93.70, and there'd be like a pretty decent probability of it occurring.
Yeah, okay,
and you
paid
could go
group
really
leader.
tight on risk.
Could have shorted the top and closed the bottom. It's like, okay, thanks, Loom. Great content. No, I'm joking, of course. But yeah, no, I totally understand. Do you find that your diagonals are more generous with retests than purely horizontal trading and maybe even a trending market? That's probably my one main kind of focus point. That in a fast-moving market, in terms of structures being retested, I feel like diagonals are more generous than horizontals if you're moving quickly. Have you found any truth in that?
Yeah, I mean, usually, like, if you actually, like, on rare occasions you get horizontals that you're asking, like, can a trend line be retested like a few times?
Sure, yeah.
Right, yeah. I find that does seem to be the case, yeah. Well, like, say, let me try and find her. Like, we kind of retested this low 96s one, 2, 3, 4 times.
Do you act in the same way as we do, like with horizontals? That if you get like repeated tests,
I think that is a horizontal.
Oh yeah, it
looks like
like
one.
horizontal. Yeah.
Yeah.
But like if your lines get like retested in a short amount of time, like several times, would you get worried, or would you like bid it every time and just get out?
So usually we like, if the way I like I'd say it's probably my most important rule of thumb is never bid or sell the third retest, because that's usually the one where it either breaks through or like if it doesn't break through, it's fine. You haven't really lost much. So
But
number
what about the
3 is
fourth?
my
Like, why 3 and not 4th?
4. I guess like
Numerology,
know.
Donald. Numerology is the answer.
you find different reasons for 4, 5, or 6, but like 3 is directly because of the trend line, I'd say.
Okay. And then I
Yeah.
mean you could make the argument, right? Like if it tested 4 times or like 3 times and it's bounced every time, why not bid it the 4th, 5th, and 6th time, right?
And that is, I think that's a very fair point. Yeah, but it's just I try avoid ever bidding or like selling on the 3rd test.
So you a fresh test kind of guy? So the first test would be where you look to get positioned, like.
Yeah.
Okay.
Because
Now,
the first usually, I'd say most of the time, the first test always gets a reaction.
yeah. So I mean, the question that follows from that is, as we mentioned, right? A lot of these come from really high time frames and maybe from God knows way back when. But in terms of like, do you have an execution time frame, or do you kind of scale down to get positioned, and then a different time frame for management? Because my whole kind of system, to a large extent, takes careful consideration of time frames generally, both for execution, management, finding levels, all of that type of stuff. So for you, whose structures are primarily high time frame based, do you kind of do that thing where you drop a couple of time frames for execution and do all that kind of stuff, or because it's the fresh test that gets the reaction, it's actually not that important?
Time frames.
Loom's like, what do I even do? How do I do that? I need to think about this for once. Just say I don't want to share that. That's fine as well. We respect Alpha and Edge on the Technical Roundup show.
The thing is, I don't really have like a set system. It's very gut feely, which is good and bad. It is bad for mental health, but sometimes it's good for P&L. But
So let's say you have like a line that is drawn on the weekly, right? And then you see an interaction on the weekly maybe. Would you zoom into like the 1 hour chart and then see if you can get a perfect entry like that?
I think I know what you mean. Let me stop presenting for a second so I can get paint.
It's a serious part of the show when the paints come out.
I mean, that's my expertise as well.
Expertise being a very generous term, but yes.
Come on, dude. I've been praised by the best painters.
Paint memes. They make my week.
You know what? I'm gonna try to. I hope I don't ruin the entire live stream. I'm gonna try to double click on your presentation and see if it gives it full screen. It'll either do that or it'll irreparably nuke everything. Okay, here goes. It worked. Well, no, it didn't. Actually, didn't do shit. Anyway, please continue.
Alright, so say. Let me draw a line. So the left is, and this is like the 4 hour.
Yeah.
Where's the pen? There it is. Actually, I don't need a pen. So we'll pretend it's a horizontal just because it makes drawing it easier, but you can pretend it's a diagonal or whatever. And the price has just done this. You can usually get away with zooming into a closer time frame and then just dinking it off of retest.
Oh, I see.
So it doesn't look like much on the weekly, but like when you've zoomed in, you can kind of get a set level of risk.
But those would be short-term trades, right? Those would be like kind of intraday, using weekly structure to punt from weekly support into intraday resistance, right? Because if the weekly diagram is to be believed to some extent, you're not playing huge reversals or bounces, right? You're kind of ping-ponging it off the level, so it'd be more kind of like
it's
intraday
like
strategy.
I said earlier, where like you're usually guaranteed at least one. So say if there's a trend line, just like here. Usually guaranteed like at least this, so like you could probably play either that or that.
Oh, I see.
And again, that would be another one of like these.
That makes sense.
So it's not too different, right? I mean, there's discretion and experience in drawing the things and ascertaining significance. I think generally, from I guess from most people listening, time frame is pretty different in terms of loom lines or trend lines, whatever you want to call them, going back a fair bit. Whereas I think with a lot of support resistance and purely horizontal stuff, we're more biased towards recency. But generally, in terms of technical rules and retests and positioning and all the other stuff that's important, it seems somewhat analogous or congruent with, I mean, other forms of technical trading that we're used to. Do you think that's a fair assessment? It's not entirely mystical.
I'd say yeah, just with the added caveat that like my style of trading is a lot more kind of, it's a lot less structured, I'd say.
Sure.
Like it's a bit more, I guess, emotional than kind of more static price action support resistancy.
So for you, does the narrative and everything else play a big part if it's like based on emotions, or like?
So for this like SPX short, if we didn't have the
I think you're sharing the wrong screen, Loom, because we've got black screen here.
Oh, let me.
Or you're presenting the wrong screen. Or
oh, I think it's stuck to the paint screen.
Yeah.
Let me.
And also, we're just about halfway through. If you've been enjoying Casual Friday and learned everything you ever wanted or not wanted to know about diagonals, press the like button. Helps us a lot, and we'd appreciate your support. There's my little shield done. Please continue.
So, like, I wouldn't say euphoria, but the whole like Robin Hood traders posting screenshots of their cool profits. Like if we didn't have that, I probably wouldn't have like taken this trade or like been so what is it where like you're sure something's gonna happen?
Certain,
that's it.
Convicted. Yeah, sure.
Yeah, high conviction, that's it.
Yeah, okay, that makes sense, I think. I mean, we talked about it while it was happening, being like, there's no way that this is going to go much higher.
I think the fact airlines had freaking double-digit days is just... that's kind of what really set it off. That like, this is getting really stupid now.
Yeah. I remember us talking, and I remember you nailing the Bitcoin bottom pretty much. Is that kind of the same story where you said, okay, now it's getting really, really stupid? Or is it...
which bottom?
So, back when...
Subtle flex, gents. Do you remember when you nailed the bottom Loomdart? Oh yeah, Donald, which bottom was that? I forgot. Christ.
Is that the one at 676 before
I'm talking about like the 3K, yeah. So when we bounced from 3 point... How low did you get? 3.6?
Is this December? Or
no, the recent one, like
the recent one.
The recent like super giga nuke.
Oh, actually, I can bring in a super nice level for this one. Where is it? Oh no! Oh, there we go.
Oh, so that's that's what you traded on, the upper line, the upper green line.
Yeah. So, like, I'd say anyone who can draw basic trend lines would probably have something near this price level, this top green line.
Mm-hmm. And for the people that don't understand this chart, it's Bitcoin in inverse. So it's everything that goes down on the normal chart goes up in this chart. Just thought I'd add that.
Thank you very much, Don.
So the fact that we came to retest this line at the I think mid 4.5s, and it was based like off of the SPX going down a bit. Well, I think that may have been the day actually no, that wasn't the day the SPX bottomed, but like the SPX had a big red day that day.
Yeah, I remember that.
And it felt like, I mean, we just had gigantic capitulation, and we were coming into this like really big level. So I was pretty sure that it would have held. And then the daily ended up in just super bearish structure here, where it's just like a complete wick. So I think at this point it was pretty clear that like the bottom is in.
And then you played it that way towards the next trend line, or did you just keep on holding? Because like from like if you played it from like trend line to trend line, right? You try to get in at 4.5, and then the next resistance would have been around 6k, right? Basically.
Yeah, I held that one.
So you just said, okay, it was so unreasonable that I just held hold through the next resistance because the down move was so unreasonable. Or
yeah, I think I changed my Discord username to like 45-62. Actually, when I took that trade.
Yeah, I remember.
So with a lot of systems that go from like one big structure to the next big structure, right, level to level, line to line, whatever else it may be, and they kind of act as, and I'm assuming this, but it seems like there's the same premise that these high time frame structures act as magnets to some extent. So if one gets respected, it'll move towards the nearest one. Is that a fair assessment?
Yeah, because I mean it's just like a high time frame price level.
Yeah.
So if since at the end of the day, all these is just price levels people have on their charts that they may buy at or sell at. So usually, like when it's a pretty major one, you can expect a lot of people to either buy there or sell there. So it's kind of it's a magnet in that it's where people are looking at, so they're not taking action at other places.
Yeah, no, that's totally reasonable. But with that said, then a lot of these, especially from high time frames, there's a lot of space between them, right? Which is fantastic for swing trading, which means there's a lot of space and upside or whatever room to be captured. But the difficult part, at least in my experience, and I've got like a similar approach with high time frame structure to structure positioning when it comes to swings. Inevitably, the stumbling point or something that always needs work on is trade management, right? So let's say you get involved at one big thing or structure, and then you know that price, if you're right, should move towards the next big structure. Is there any wisdom you can impart on managing swing trades that you got involved at one level, you have an idea of where it should go, but it's always the in between that's quite difficult. So do you have anything interesting to say on that front?
Pray that you're not in lockdown and don't have much to do apart from trade. Because honestly, like you've just got to fixate on, say, the two levels you're super interested in, and it's like kind of bargain with yourself that like, yeah, you could try and scalp in between, but like they historically, when you try and kind of front run yourself by like scalping in between, it doesn't usually end well. So say for that trade, like I think I basically held the whole way throughout, but it is quite hard, and obviously like you want to kind of play smaller time frames and like skim a bit off the top here and there. But it just comes down to kind of like you've just got to convince yourself.
Do you just like use a separate account then? Like if you have like a swing trade going, would you consider just trading on a different account, like the smaller time frame stuff, or are you just like, okay, that's not a good kind of way to go at it?
I mean, we shared that we had like our little trading accounts.
Yeah.
And just trade smaller size, yeah. And I'd say have a clear invalidation as well.
For the swing trade.
Yeah. Just be like, you've literally just got to bargain with yourself. Like, as long as this doesn't hit my invalidation, I'm not closing.
Yeah, that's a good way to look at it. Even more so for the people that tend to close out shorts or like longs in general too early. And I mean, I think everyone has made that mistake where they just kind of close too early, or in general just not trust the plan that they set.
Is there a threshold at which you'd adjust your risk in those cases, Loom? Right? So let's say you're playing like a several thousand, using Bitcoin as an example, dollar swing, and it gets, let's say, 2/3 of the way the target. Do you employ something like trailing stops or, whatever other strategy to kind of lock something in? Or is your bargaining very harsh in the sense that I got involved here, my objective is there, anything in between is a scam, and it's kind of ride or die? Are there kind of any sort of management reference points? You're like, hey, this has gotten most of the way there, and at this point it would be unreasonable for me to allow it to go back to my entry, or is it very much like I'm only right if it hits my target or invalidation?
I think at that point it just becomes like, I mean, you can say like never trade your P&L and like stuff like that, but it can get quite like mentally frustrating a bit. So it's very it's under your discretion where you take profit, because on the flip side of what I said about like bargaining with yourself at the start to never close and stuff, is the closer it gets to your exit price, the more risk the trade has, because effectively your stop loss becomes from the current price to your stop loss. That's how much money you're willing to lose.
Yeah.
And your profit is from the current price to the if I get paint up, will it?
Yeah, your original take profit, right?
Yeah. So I can draw this pretty easily. Would you use clear all?
Would I allow this trade to retrace, let's say 80% of it gains, 80% of its gains to give me an extra 10% to my target, right? So it's like a dynamic risk-reward assessment, essentially, if I've understood you correctly.
Yeah, I'll draw it quickly.
Take out the paint, we need it.
The window.
As always, gents, any questions for Loom, feel free to ping them in the chat. I'm sure Donald will pick out the interesting ones.
So
I've been scanning.
this is your entry. This is your stop loss. This is your take profit.
Do I
And the
inspect
price-
element?
And the price moves to here. Now your entry, your take profit's still here, but since the entry price doesn't matter in the trade. I mean, it does on a psychological level, but like a purely profit and loss thingy, you've only got your exit and your stop loss.
Mm-hmm.
So now you're taking on this much risk for this much profit. Whereas here, say you're taking on that much risk for that much profit.
I think we all share that view in terms of assessing risk reward. And if anyone for some reason in the chat didn't understand the fantastic diagram in front of you, I've got a video, quick plug, on my channel about trade management, and there's also a risk management one, and these topics are all covered in detail there. But as Loom says, the basic premise is that the risk reward of a trade isn't fixed once the trade actually starts moving, right? Which leads me to my next question, that in the second diagram, where you've got the trade has moved in your favor and you've got that new risk reward ratio, and let's say you make the assessment that it's unreasonable or it's too much risk, or it's evolved to be less favorable, however you want to define it. What measures for you personally are in your arsenal to mitigate that? Do you just close out early? Because I know Donald does that a fair bit, whether that's from a risk point of view or not, I'm sure he can tell us. Do you trail your stop, or once you've identified, let's say, the less favorable conditions, what next?
I mean, if it's like a pretty decent, like one of my, I've got like 6 main Loom lines. Like if it's trend lines, Jesus Christ. Like if it's one of them, I'd probably just hold out till it either hits or gets like a pretty gnarly rejection.
Okay.
But the issue is, this is like, there's no set way to do any of this, since it's completely dynamic. Like you long on a set structure, but what happens afterwards is kind of out of your control, since you've only got one piece of information, which is your exit.
Yeah, I think I understand what you mean, because you can't really do anything about the price action once you're in the trade, and then like sometimes it does something that you don't want to see, and then you just close out early, and sometimes you decide, okay, if it does this, it's still fine enough to stay in the trade. I mean, there's something that I think is one of the most difficult parts in trading in general, like making those on the fly decisions. And I mean, even if you pre-plan, you can't pre-plan for everything, right?
Yeah.
I mean, sometimes news comes out and you're like, okay, I really don't want to be in the trade anymore. Sometimes you still want to be in the trade. I mean, that's all just on the fly decisions that you have to make. that you can't really do have a system for, not at least for everything, because like you said, it's not always in your control.
I think that's very aptly put. I guess just if the trade's making you sweat crazy buckets and you're in decent profit, it's probably okay to close it and maybe not do something that makes you sweat so much next time.
Yeah.
Where do you see
at that point-
discretion, by the way, Loom? I think it's sort of a similar theme. A lot of this obviously discretion based, right? I think that's the case for all of us. Although I think Donald shares this. We've gone from being very systematic, and then as you gain more experience, you move more towards discretion. I'm not saying that is the way to do it, but I think amongst manual and kind of technical traders, that seems to be the prevailing trend. No pun intended. For you, because I saw you make a tweet saying you were either looking at, or that you should kind of systematize some elements of your trading. Could you give some insight as to kind of where you are in that kind of macro development point of view with your own approach?
So because obviously you've seen me tweet a few times geez, I should have just waited for this level, or kind of just hope that it retested and say I'm just longing it immediately. I think it's just that's a whole matter of patience. Just kind of, since currently it's quite gut feelingy, but I think there is some alpha in a way where you only trade, say, you only trade this, and you have a set risk where you'd long this. Where's my pen gone? You'd long this with a stop loss. Say it made a low. We'll say there was some price action here, and then you put the stop loss there. And I think I probably should move more towards that, just because trading's good and all, but you don't want too much stress in it, because people say you should trade completely without emotions, which I think is just it's impossible.
Yeah, I disagree with that premise as well.
You have a completely set system, and I think it also kind of doesn't make sense. It's kind of like a pipe dream where you literally just see the chart and levels. I think it kind of defeats the point of being human.
Yeah, the Terminator trader. Yeah. I think there's an edge a lot of the time that develops over time, or some useful insights that you can actually derive from your emotionality, right? And then especially if you can then combine the two, and you sort of a certain setup or a certain trade or a certain trading session, a certain time frame, a certain instrument, whatever it may be, makes you feel a certain way, right, and affects you in one way or another. That can a lot of the time be worth investigating, and more often than not, some kind of significant relationship will come out of that. So I mean, I totally agree that it doesn't make any sense, and don't think it's reasonable to ask anyone to disregard their emotions completely, especially if they're kind of manually trading this themselves. I'd almost suggest the opposite, to be very cognizant of your emotions, what makes you feel a certain way, and why, and then how it affects you when that comes up, right? Because a lot of the time, I think with sizing and management and all those sorts of things, that there's definitely useful insights to be gleaned if you don't shut off your emotions, but rather look into the feedback that you're giving yourself. Does that sound somewhat relevant to an experience you've had?
I super agree with that. This is kind of a tangent, but I guess it's still important to the main point of emotions, where basically every single new trader will follow the exact same pattern, where they'll end up big after a few trades. And that's when the kind of risk on sets in, and the full sizing and the oversizing sets in. But I think what I've realized is it's incredibly difficult to self-identify that. Obviously, it's very, because they think that they're on top of the world and stuff. So it's very, very hard to self-identify that. But on the flip side, it's super easy for someone else just to look out from the outside and be like, oh, okay, friend, it's kind of you've had a nice run, it's time to chill a bit.
You're at this point in the trading cycle, sort of thing.
Yeah, exactly.
Do
And
you
so I
think
think
everyone should have like a trading buddy or something? That kind of sounds like what you're trying to say.
I think it is possible to self-identify that, but you've got to be very kind of not very emotional, but just very open with yourself.
Hmm.
Because I had a pretty crazy run for a few weeks, and it was at a point where it was just like I feel like a complete god, that I can't lose, and I literally took 90% of the account out.
Based on that feeling.
Yeah, because I mean, worst case, because obviously after that point the downfall is very very quick. So worst case when you do that like big withdrawal is just you delay your downfall, and
Yeah.
best case you prevent it completely. But yeah, it's like just being able to gauge your emotions there is super important.
I'd argue that comes with experience, right? I mean, you go through it once, you go through it twice, and you're like, okay, I've made this mistake 2 times now, not gonna do it again. And then maybe you do it a third time, and then you hit yourself and be like, okay, I thought about this before. And then at some point, you just get like start developing some kind of safeguard for yourself. I think
Yeah, I think
that's
I'd agree with that.
Yeah, I think you
how
get
most
better at
people
it,
want to
right?
do
I
it.
don't think it's a
Yeah.
switch. They're like, okay, I'm an emotional trader, I'm new, I suck at this, and then one day, you've done it 3, 4 times, whatever mistake you keep doing, and then suddenly it clicks, and you're like the perfect trade manager, executor, whatever it may be, right? The way I've discovered it, at least, it's always a process. It's just something you get better at, right? You gradually get better at managing your trades and executing and not oversizing, or at the very least, you start to recognize these things earlier. So the impact they have on your account, for example, gets smaller over time. I think a lot of newer traders kind of think it's just one day everything falls into place and it makes sense, and you kind of grind 18 hours a day, charts, reading, etc., and then it magically clicks, and then from then on you're profitable. That's certainly not my experience with regard to how to get to any sort of reasonable endpoint. To this day, I mean, just scrolling through my miserable Twitter is enough, where I'm constantly, reassessing and trying to get better and eke out. And again, these small things, right? If you, let's say you take a fixed number of trades and you start reducing your losers by 1 or 2 or 3 every month, a behavior that you would have done in the past, which would have lost your trade, you avoid once or twice, that kind of almost has like a background cumulative net positive effect on your account, which may not always be immediately visible, but has like a huge impact, right? So just for those listening who are sort of wet behind the ears, which I still think I am to a large extent, but certainly like very green, it's not supposed to one day just fall into place and from then onwards you're done and finished. It's very much a recurring process. At least that's my experience. Gents?
Yeah, I mean, if you think about it, like Loom, for example, has been in this market for ages, and he still talks about this stuff. So, I mean, it just takes time. I totally agree. And I mean, it's the same for me. I still have mistakes that I'm trying to fix and that I've been trying to fix for a while. It's just, I mean, everyone just needs to keep on working on themselves. And I mean, that's not just for trading, it's in life in general, right?
Sure.
It's a constant state of learning and kind of making yourself better at the stuff that you do. And I mean, the longer you spend doing something, the better you get, as long as you do it with your mind in the right place. As in, if you think about what you're doing and kind of like working on it, seeing, okay, what could I do better? What is the problem that I'm having and how could I fix it? That kind of stuff makes a huge difference, because like it's not necessarily all about like Cred said, like if you work 14 hours, look at charts, read books and stuff, and just consume, and then don't think about it, like that doesn't really help you much. Like the process of thinking about it and kind of working on it, um, with your mind in the right place, I think is more important than actually like spending 15, 16, 17 hours a day. Doesn't really help you
Yeah.
if you don't think about what you're doing.
I think I super agree with that. And also, like, this is all a marathon. Like, none of trading is a sprint. Since everything is so emotional and like there's no kind of set way for anything to work. If you try and kind of yeet it all at once, it never will end well. And that's why I think like probably my best advice to like a new trader would be just kind of focus not on making money but on not losing money,
and the rest comes after, right? It just comes
Exactly,
eventually.
because if you can just be better than average, which is currently just crackheads on 100x either way. I guess 125x now.
Yeah. Shout out to Scooter.
Like it's just, yeah.
I think I agree. I usually say the same thing. That's a very common one, as in focus on survival first and then get better. I phrase it slightly differently. I tell people in that position to focus on the process of trading well rather than the results strictly. And then if your process is good, the results tend to follow as you fix up those little things you learn through experience, right? Which is why I always ask myself, what is the trade at this level? Or like, is this a good trade? As opposed to, can I make money right here and right now? Because you'll get so many sort of false positive feedback loops from that type of behavior, especially in the short term, where you just do something, it works, and you think that therefore it has an edge or it's replicable, it's worth doing again. I think that can get you in a really kind of almost toxic mindset and a losing mindset. And when that one thing stops working, be it because you were lucky in the first place, or even if it works, you run into a random cluster of losses, your entire kind of account can go out the window very quickly, right? So I think for anyone listening, kind of focusing on the process of trading well is a very important bedrock to have, and then even just by polishing off your mistakes, you can get some pretty solid results. In my experience. But, we talked about the whole kind of wisdom, be smart, it's a marathon, the stuff that everyone kind of knows, but it's hard to follow. I actually want to round up by asking about your degen account, right? Because I think it was to some extent publicly showcased, and you mentioned it earlier, that you kind of ran a very small amount into a large amount, and then it got nuked, or it didn't. Could you kind of give us a quick tour, if you will, of and perhaps any insights on small accounts generally and just how that whole adventure went for you?
Oh, so that was kind of like basically when I think this is just something I learned from trading Bitcoin for years, but whenever it goes down just an incredibly audacious, ridiculous amount and liquidates everyone, where like there were stories of funds getting shut down and BitMEX had like 400 million in liquidations.
Yeah.
It becomes completely absurd to think that like Bitcoin will ever go back up again. And it was at that point where it kind of became like this is gonna go up really high, just because it fucked so many people. And I even tweeted it like at the 4Ks. Like the only way this makes any sense now is if we go back to the all-time high. But it's a completely like vicious shark move. I guess you only really see in crypto markets where when say it was at 10K, now it's at 4K, no one thinks about like, wow, how can I profit from this? It all becomes like, I need to survive. It's like fight or flight, and obviously, if profit was fight, then ensuring you have some money left is flight.
Nice,
Everyone's
well
going to
said.
choose flight. And so it kind of presents an opportunity where the market goes up in levels, where first like you've got the dip buyers, and then you have some like the consolidation at the 6Ks where it kept getting swatted down, where like the price action looked pretty bearish, but there was just the whole like the reason I was so I guess obnoxiously bullish down there was just because I knew that like if it went back down, it was completely over, because it wasn't like a natural move by any stretch of the imagination.
So what you did was, okay, if it goes down, then it's over, and Bitcoin like has just proven so many times that it's just like it just doesn't die, right? I mean, we've had a lot of these kind of moves where you think, okay, now it's over, and then it just miraculously kind of goes back up, and then just trade based on that.
Yeah, basically, just obviously, like I looked over my trade history, and 46% of like the total trades on that account were still shorts. So like, I was taking like I'd take profit at like key levels and hedge out a bit, but it was always like I didn't think we'd ever properly pull back just because there were so many people either sidelined or like just completely liquidated who were like just trying to get back into crypto by some means.
That's
I guess this is true max pain. You get people talk about like, oh yeah, if it spikes through here and then tags here, that'll be max pain. But like this was max pain.
Yeah, I mean, I remember, like, I streamed back when it went to the lowest, and I was like, oh shit. I just bought some, and I'm already down 20-25%.
Yeah, that was a
in
mental
like,
day. I mean, I think that those are the days you never forget in your trading careers, right?
yeah.
I was just watching it and I saw it hit 4.7k, and I like tweeted and I bought some spot as well, literally at 4.7k. I'm like, okay, well, monthly support. And listen, if this goes to zero, no one's gonna remember me anyway, right? I'll become forex cred or fixed income cred, and we'll just wrap this whole thing up, and it doesn't matter, right? So risk reward wise, it made sense. But I went on Coinbase and bought some at 4.7k USD equivalent. It was like 4k GBP or something. And then I just watched it drop $1,000 on the chart, and I'm like, well, okay, right. Well, I'm gonna about to hire a guy to make me a new logo, right? Forget the crypto stuff. But I agree with you that after events like that are just so outrageous, it takes a while for normalcy to some extent to settle in, right? And I think what your strategy, if I understood correctly, did well was essentially capitalize on, for lack of a better kind of whatever cringe term, the disbelief of price going up, right? Where it has to be a bearish retest, there has to be this, that, etc. The event itself was so absurd that it also warranted a kind of absurd counter move, if that's a fair assessment.
Yeah, another thing I would say is you got people who kind of you get the ideological like BTC to zero guys who were correct on the first drop. Actually, wait, no, I'm going to use the SPX for this. So say you were bearish the Pico top at 3,400 and you held the whole way down, never took profit, nothing. And then you see it kind of reverse on you. At least from my personal experience, I always kind of add to the trade too early.
Okay,
And so you'd get people kind of their entry was at 34 and then they added on the first move back up at like the 23s. And then it
on
went
the chart,
up
are you?
more.
Because we're on Paint, just to be sure. You're narrating,
Oh,
right?
sorry.
Feel free to
Geez,
throw
let
it up.
me move the chart. Sorry.
No worries. Thanks for pointing that out in the chat.
Yeah, I mean, I was just like, oh, he expects us all to know how the SPX
I think
shot.
some of our crypto Twitter colleagues had a bit of a rough spin with equities, for lack of a better term. Those who perhaps got into favorable positions before the big drop, I think, anecdotally, observationally, had a bit of a rough time on this move up. Some of the threads I've seen were quite...
You're like, oh wow, this trade's finally a winner. I'm like, I'm correct. The markets are going down, and then it kind of the P&L gets to you, and you start thinking like, this is stupid. Every bounce is a fake, and before you know it, your entry is much closer to the current price. So say you shorted 34, held all the way down, and then just started adding at like the first resistance level. And at least from my personal experience, when it gets to say the next resistance level, like an earlier version of me would probably just add more and keep bringing my entry down. But the thing there is like all you're doing is increasing your leverage. Like you haven't taken anything out to put back in, but you're kind of mentally trading the P&L you once had.
Yeah, make back what you made before.
Good way of looking at it.
Yeah, and so I think since obviously markets are people trading, I think what happened with the SPX and with Bitcoin is the people who were right being short from the top just held and kind of added way too early. And it's quite apparent with we had that basically the whole way up. I also had this I was tweeting about it a lot, this level at 7,700.
Yeah.
And it got front run so many times. Like we got to 7.3 and then 7.4 and then 7.3 again. And I think that literally was people who were like, they were still in fairly decent profit short, and they were just kind of trying to front run the first major resistance. Like, wow, I can't believe they let me get away with this. I get to short it this higher up. And the only invalidation there just becomes liquidation. Which resulted in this just Chad $800 candle upwards.
That's people who are already in profit, basically getting, going to the sacrificial altar from adding too early at levels they thought they'd get front run as amazing resistance, and then just getting blown out.
Yeah. Basically, all my trading is just counter trading other people. Just euphoria.
Yeah, I mean, I used to love, like, whenever I did like Twitter posts, and I mean, I never found a way to kind of make it into a system, but whenever I posted a trade, based on the reaction I've got on the trade, I was almost certain if the trade
on the tweet,
was gonna,
right?
Yeah, on the tweet. Like, I tweeted about it. Based on the reaction of the tweets that I got, I usually knew if it was gonna be like a decent trade, a winning trade, or like a losing trade. It's kind of funny. Like, I mean, the whole, like, a lot of people say, I don't try to like trade sentiment and stuff, and I agree mostly just because it's really easy to kind of read into people. Like, you see like one bearish post on Twitter, you're like, oh, everyone's bearish, or you see like one post on Twitter that's bullish, and then
you
you're
see
like,
exactly
oh,
what you want to see.
Confirms your bias, right?
yeah.
Yeah.
You're just gonna confirm your bias. But whenever I did it on my own Twitter, and then just reading the comments always kind of made me either really sure that I was gonna be a winner, like the trade was gonna be a winner or not. And I mean, I still remember like 10.3K before like the entire downtrend began. I posted like that I was shorting and going on vacation, and all the responses, and like, well, even when I was on vacation, I got like people DMing me and like writing tweets at me that I should close. And I've never been more certain that a trade was gonna play out. And it's kind of like that is using like the counter trade sentiment, whatever you want to call it, to your advantage. Because I could have closed that, right, and I might have closed it if I didn't get those comments, just based on the fact that it took really long to actually go down, which I usually don't want to see. Like, if I short, I usually give it a time limit, and I'm like, okay, if this doesn't move in a certain amount of time, I'm just gonna get out and try another time. But yeah, in that case, it just got like so many bullish comments that I was just like, okay, this is probably gonna like really gonna go down, and that's what happened.
I guess there's kind of a science to it where people like markets are, you're just trading with other people, and like people tend to get euphoric at very high time frame levels where it's like, oh geez, if it breaks out here, this is the one. Like, but Udi, I don't want to really put him on blast, but Udi Wertheimer, I think.
I'm not going to
on
try
Twitter.
to pronounce his surname out of respect, but yeah,
Like,
I know the gentleman.
He's been historically incredibly accurate at predicting Ethereum bottoms. It's like where he gets brave enough to kind of like just tweet about how ETH is about to die. It's kind of like you can kind of take that as the market's kind of getting euphoric at a very key level.
Yeah, I totally agree. Like, usually, and I mean, I've noticed that with myself too, right? And I mean, I think everyone kind of does that. Like, whenever you get vocal, like, you see a chart and it looks really bad, and you don't really care about it too much. Like, you're not in a trade, you don't really care. You just look at it and be like, oh, this looks bad. And then it starts crashing, and then you're like, oh yeah, look at this, haha, it's going really down. And the moment you say that is usually like, everyone looks at the same chart, right? And then you have people, like, when I said, oh, this looks bad, other people that are in a trade probably think the same, right? They're like, oh shit, this looks bad. I mean, it's long, but it looks really, really bad. And then the moment it starts breaking down, those are the ones that are going to get stopped out, right? And the moment they get stopped out, the chart looks bad enough for me to be like, haha, look at this, these idiots longed, or like the same thing. like on the opposite side, and then it usually like that's where it usually reverses, right? Once you have like the people with high leverage or like in general the people that you can shake out, once those are shaken out, you usually get at least like somewhat of like a counter trend move. So it's kind of like people are going to be vocal at the turning points the most. It's just how it works, I think.
I agree. I think also there's a really weird kind of, I don't know, is it for like, it's some weird language nuance that we have in crypto Twitter, where price will come into, let's say, a really good level of resistance, and the way people will articulate the fact that it's at resistance is by saying, as soon as this level breaks, we're going way higher, right? Now, to me, as a technical trader, that they're telling me to short more often than not, right? Because you're telling me this, in terms of invalidation, this is like a great place to sell. And like, if you don't sell here, there's nowhere else to sell, right? Or it's the same, like, if support breaks down, like the price comes into a key level, and or like, not even support breaking down, price comes into a key level, and they're like, oh, well, if this gets reclaimed, this would be super bullish. It's like, well, yeah, but it hasn't been reclaimed. So are you telling me this is like a really good resistance level? And if any, you're like, do you see what I mean? It's kind of the inverse of what they're trying to get across. So they'll try to make it sound bullish at resistance, like, oh, it's only got to do this little thing and then it's super bullish. It's like, well, yeah, but then you're technically telling me that this is the best sell available on the chart, right? So it's something I've noticed in the last, like, I don't know, it's been the case for a while, but whenever like you get too much reclaim language, more often than not, it just means a key level has been lost and the opposite direction is more likely. Do you know what I mean?
Yeah.
But that happened, like, that used to be me, like a billion
It used to be me as well. I caught myself
Like,
doing
it's
it.
just like, once we take this level, it's like game on. And I'd be like, since entering a position there is the worst risk reward you can, because for confirmation of your initial trade, you have, say, like, you're waiting for it to break 10k and you long 9.9, you're effectively longing 9.9 to 10k with like undefined risk on the down end. And then when it breaks 10k, you can enter another trade where you're like, oh sweet, we broke 10k, now it's super bullish. So when you start thinking about it, like, by longing here, I'm longing resistance, hoping to get a bit of profit, so then I can like breakout trade.
Yeah. I mean, it's basically just saying, okay, I'm gonna, like, I really value these $100 in, like, while we're at resistance more than, like, because you could also just wait for the resistance to break, right? And then you just lose the differential, but you don't have all that risk, because the moment the resistance breaks, I mean, you're proven right? And I mean, why take the risk of those like small numbers, like from price to resistance, if you can just wait for the resistance?
I think it's an obsession. I think there is an answer to that, and that's an obsession with a perfect entry, right? They're looking at kind of lower time frames, trying to get the really low time frame retest, not realizing that if they were to zoom out or look a couple of time frames higher, all they're doing is just buying resistance, right? I think a lot of the traders I follow, and just I think crypto Twitter generally, if there is such a thing, are very reluctant to pay up for an entry, right? They'd much rather kind of either get involved at the level and catch the impulse, or just either average down or buy the dip, whatever. It's very strange to me that in a very strongly trending market, there's such a reluctance to pay up for entries, which I think is a totally reasonable approach in those circumstances. I don't know if it's an ego thing or just a weird way of trading, but I personally don't see anything wrong with that approach.
I think I can kind of see why, but like, it looks cool, but I think there's this crazy fascination just in all markets in general about entries.
Yeah.
And I think that's probably one of the most destructive things, like, for a trader, just kind of being focused on your entry, like, oh, I could take some profit here, but then I'd ruin my entry.
Oh yeah,
like,
I mean, I've battled with that before.
Yeah.
I think everyone's done that before. I mean, I remember on ETH, like the first time it hit $80, right? And I was really bullish on ETH, and it went to like from 86 where I bought it to like 100. I was like, okay, yeah, this is going up, but I don't want to buy more than I've already bought, because I mean, I have this pretty like it was literally like it was the bottom, right? I was
You
like,
see the
I
green
don't.
line on Bitmax at the bottom
Yeah.
when you're like, fuck yes, move
Yeah, and I
on.
was like, there's no way that I'm gonna buy more because it's gonna look like. I mean, it's just the bottom long is gonna be gone, and I mean that stayed the bottom, right? So if I held the trade, I would have died in funding, right? Probably gave back everything. But still, like you have this kind of mental thing where you're like, oh yeah, I bought the bottom, I don't want to ruin it. And for me, the right thing would have been like buying more on the confirmation of the breakout.
Yeah.
But I just didn't want to. And I think, yeah, that's so I see where a lot of people are coming from. Something that I avoid nowadays. Like if you're right on a trade, there's no harm in kind of saying, okay, I had this bottom long, but I mean, I'm fine with adding anyway. But that takes some time. And then also like the opposite happens a lot where people just want to get like crazy sizes. So they don't look at it, okay, I have like the bottom long, but they look at it, okay, I'm long like I have like a $10,000 account and I'm long like 500,000 from the bottom. Like that's just the opposite where it's like even worse.
Yeah.
Because you're gonna be you're gonna end up liquidating. I mean, we've seen over the last 2 years, like on BitMEX, whenever you see these crazy wicks, right? And you're like, holy shit, BitMEX is a scam because it wicked like $300 below other exchanges. That's people like that get liquidated, right? Because they look at their size and they're like, okay, I want to be long this and this size from like in general, and I don't care like how I do it, and that's gonna get you liquidated in the end. But
I totally agree. I think there are, like, in my mind, there are three places. I mean, obviously, invalidation and how and where to get out, more important than entry on average. I think for me, there are at least three places where entry it does matter and is significant. The first is when you need it for the actual mechanics of the trade to play out, right? Like for a lot of lower time frame trading, if you're trading from one intraday structure to the next, there's a certain limit in terms of how much you can pay up or pay down for an entry, right? After a certain point, you're so late, quote unquote, and the trade is so close to target that it doesn't make sense in terms of, the risk reward becomes so skewed, even if the probability is good, that the trade doesn't make any sense, right? The second one would be if you don't care at all about your entry. I've seen this a lot in kind of, again, developing traders, is they just get very lazy in terms of patience and just kind of average in and start averaging in losers. Like, yeah, well, this level's okay. Well, yeah, I could have waited for this level. I'll just add a bit. And that can ingrain bad habits. And then the third one, this probably applies the most for me, is psychologically, it's much easier I've found much easier to manage trades based on price action and do it well and do it technically with a good entry rather than with a crappy one, right? Because again, P&L trading, whatever you want to call it, I just find psychologically the freedom, whether it's fictitious or not, or whether it's valid or not, separate discussion, but purely psychologically, the freedom that comes with watching and looking at and managing a trade with a good entry, I found just helps a lot compared to, you get involved and then you're immediately offside and it's a high time frame trade, you're underwater for like days. It gets a bit difficult on the human side, I've found.
yeah, agreed with that. I mean, if you're stuck in a trade, that's a loser from the get go.
Yeah.
I mean, it sucks.
You're gonna find a million reasons to exit, right? But then at the same time, if you have a really good trade, and even if it starts like good entry and it starts turning against you, the opposite is true, right? You'll find every reason to stay in because you marry your entry. So here's the lesson: get a mediocre entry, and you'll be an amazing trade manager. Okay.
But the funny thing is, like, if you get like a bad entry, and then it goes against you, the trade goes against you, you're gonna have a more difficult, like most people anyway, are gonna have a more difficult time to get out of the trade, even though like the trade went immediately wrong.
Yeah.
Than the ones that have a good entry. Like that's one of the mistakes I see a lot of people do is they get in a trade, the trade goes well, goes up, and then it goes back to the entry, and they're like, okay, I'm gonna just get out of the trade. I haven't lost anything. This is completely fine. And then it goes back up or whatever. Like, I mean, even if it doesn't go back up, right? You just close the trade based on nothing other than not wanting to lose.
Yeah.
And then the opposite happens when they're losing. They're in the trade. price goes down, and then like I don't want to close this because I don't want to lose. But I mean, if you look at it from like an outside perspective, the one trade actually had a reaction that you wanted to see, and the other one didn't,
Yeah,
right?
yeah.
But you're gonna be stuck with the one that didn't have the reaction you want to see, and kind of close the one that had it. So I think that's one of the mistakes a lot of beginners make. That is definitely one to avoid, just because I mean, if you're just trading to win, like if you're always afraid of losing, you're never gonna win.
Totally agree.
It's just how it works.
Yeah. You know, you hear this a lot actually in like trading wisdom, quote unquote. Like, oh, I expect every trade to be a loser. It's like, well, why the fuck are you in the trade then? Get out. Find a trade that you're gonna win or that you have conviction to take. Like, I get it from a risk management point of view. Kind of having that approach that you can stomach the trade being a loser, but you don't. I think it's a bit extreme to take it to that point where you just assume that whenever you touch the market, you're going to be immediately offside and you suck at this. So I think there's a certain ceiling to how conducive that can be. Like, it's one thing, you know, the whole paid group meme, risk was managed, etc., etc. But I think if it's a symptom of perhaps something worse, if whenever you take a trade, you're like, right, I've written this one off. I don't care what happens. You know, my risk is managed. I mean, it just sounds wrong.
It's just a hedge when you're wrong, right?
Just a hedge. Yeah. Fantastic. Well, look, Loom, you've been very generous with your time as ever. It's been fantastic having you on. Any final parting thoughts, either for us, the audience, or anything you want to leave us with? Where can we find more of you? And the floor is yours.
I guess you can find more of me on my Twitter account, and not really got much else to say. It's been a lovely hour and 20 minutes. Super fun. Hope we can do this again.
Oh, fantastic. We'd love to have you back.
I'd love to, yeah.
And since we're doing thank yous, as ever, thank you to Bybit for sponsoring Technical Roundup. Very kind of them to do so, and their links are in the description if you want to go say thank you or show some support. Russian bot army would be much appreciated on that. Leave a like on the video. Wouldn't ask if it didn't make a difference. So free way to express your support as well. Subscribe to the channel. We are live every Monday, Wednesday, Friday at 7 UTC. And you've got me on Monday to talk about my terrible trading from this week, which should be fantastic. Thank you very much for watching. That's all from our side. Have a fantastic weekend, and I will see you on Monday. Donald, Loom, thank you both. Hope you have great evenings. And that's all from us.
Right back to you. Bye-bye.